Have you ever gotten an email offering you easy money, fast small business loan, closed and funded tomorrow? I get lots of these in my inbox, and I often wonder just how good a deal are they? Should I take this money? I could use it for a lot of good business purposes. Well, today we're going to analyze the Merchant Cash Advance Loan, the MCA loan, which is become such a prevalent part of the small business community here in the United States. Here's an example of one of these emails that I've gotten, redacting, of course, the personal information. Here's two great offers that they offered to one of my clients. The first one is a $150,000 loan that pays off an $86,000 loan they already have. So they're getting a little bit extra money out of it. It's over 18 months, and they only have to pay $2,700 per week. Of it, if they take this loan, aside from paying off the first loan, they're going to get an additional $54,000 cash in their bank account tomorrow. Now, that sounds like a pretty good deal, but is it? They also got a second offer, and the second offer is a new loan for $75,000. This would be paid off over 11 weeks with a $10,000 weekly payment. Now, that's a much higher weekly payment, but they also pay the loan off faster, so hopefully there's less interest expense. But is there really? These loans are intentionally structured to be very confusing and to make it hard for you to analyze whether or not this is a good deal. So this would be a great time to contact a fractional CFO and say, hey, which of these loans is actually a good deal? So let's go ahead and calculate the exact cost of this capital to see just how expensive this loan is. The first thing we have to do is calculate the total amount that we're going to repay on the loan. So I might calculate the number of payments as 18 months times 4 weeks. But right away, we've actually already made a mistake. And that's because there aren't 4 weeks per month, despite the common convention that we use. Mathematically, there's actually 4.2 weeks per month on average. Every third month or so, we have a 5-week month. And so this error is here, and it's going to understate how much we pay. Let's keep moving forward with the error for now, just to see how much it impacts our calculations. So our total repayment is going to be 72 payments times $2,791 per week, which gives us just over $200,000. Now, if I was calculating simple interest on this loan, I might take that $201,000 divided by the $150,000 loan amount and subtract 1 to get 34%. 34% is a pretty high rate of interest. But remember, this is fast money. It's coming in tomorrow. If I need it to make payroll or something like that, I have to pay a bit of a premium for that. And that's how these MCA loans work. They give it to you quickly and they charge you a premium for it. But 34% is not bad, except that that's the wrong number. The reason why is because if you take a look at the net cash received plus the loan they're paying off, it doesn't equal $150,000. It equals $141,000, making a difference of $9,000. That $9,000 is loan fees that they're going to charge to you that are implied here but not explicitly stated. And this is one of the many tactics that MCAs use to make it not clear exactly how much you're going to be paying. They imply fees but don't include them. So let's include fees plus interest as part of our cost of capital. And the way we can do that is taking that same $201,000, but instead of dividing it by 150, we're going to divide it by the actual cash we receive plus the loan that we pay off, and subtract 1, of course. And then you can see that that adds 9 points of interest onto our loan, which is huge. I mean, if you were to think about, like, do I want a mortgage at 5% interest or at 14% interest? That's a huge difference, right? Well, the materiality of that is no different whether it's 34% and 43%. So this is a big expense that's kind of buried in there. But this number is actually also incorrect. And the reason why is because we're assuming a 12-month horizon when we do this simple interest calculation, but this is actually an 18-month loan. So I'm overstating my interest a little bit here. So the way I'm going to fix that is I'm going to annualize it into an APR equivalent. And the way you do that, it's a little bit of a complicated formula, but we're going to use an exponential of 12 divided by the 18-month term. And that restates our APR down to 27%, which is much more reasonable than 43%. It's in the range of credit card debt, if you want to think of it that way. But remember, we also have this error up here where we're calculating the incorrect number of payments. It should be 4.2 weeks per month, not 4. And you'll see that takes the number of payments for us from 72 up to 75.6. In reality, this is probably going to be 76 payments, what they actually end up doing, because they always round up in their favor. And that adds another 4 points on, and we're up to 31% interest. So you can see there's a lot of little hidden nicks and tricks in here that make this loan kind of tough to analyze. To save us time, I've gone ahead and evaluated offer number 2 already. And here's the calculations that go into this. Remember, this is an 11-week loan for $75,000. We're hoping that the shorter term means that we pay back less in interest. You can actually see that this loan is a much worse deal. In this one, when we time weight our interest, we're actually paying over 2,000, almost 3,000% APR. Unfortunately, this is not uncommon. I see these types of high rates in MCA loans all the time. And again, they're using these tricks of not stating things explicitly, confusing me with the time periods. One of them is 18 months, one of them is 11 weeks. Mixing fees in with interest and not stating explicitly, adding in a loan payback. They layer all these things in to make it as confusing as possible so that you don't know exactly what loan you're taking on. If you'd like to learn more about MCA loans or how to calculate the cost of capital, go ahead and visit our website, cfoshare.org. Also, if you enjoyed this video, go ahead and like it, subscribe, share it with your friends. Let's spread the word about MCA loans so that everybody knows what they're getting into and nobody is tricked into a sharky loan.